Simon Maughan. He's co-head of European equities at MF Global. Simon, thank you so much for joining us on Countdown. How confident are you that actually these stress tests will be credible? Because I guess this is a main issue. Last year, we had stress tests, which were laughable, really. That's what the markets were saying. Are these going to be more stringent?
Well, they're clearly more stringent because they incorporate some losses on sovereign bonds that are held in banking books, which was basically ignored last year. And there are some reasonably harsh assumptions about currency moves, economic growth and stock markets. But really, it's more about what we do with these results. If they just publish the results and that's it, then investors will say either, well, a few banks failed, we were expecting that, but nothing's changed, and so what? Or
but
alternatively,
Simon,
a lot of banks will fail, there'll be a lot of capital raising, and that will be seen as negative. Very few people are seeing anything positive out of this process.
I mean, I know that, it's much more stringent, but if we look at the situation where we're in Europe now, it's very different from a year ago. A year ago, sure, we didn't really make up for any losses for bondholders, but at the moment, we're talking about a 90% chance of default of Greece. And there's no talk about a country defaulting in any of these stress tests, we understand.
Yeah, what I'd like to see, and I'm not sure that this is on the table, but if you put some kind of haircut or loss onto the Greek debt and indeed other peripheral debt in this stress test, and you recapitalise the weakest banks so that they can deal with that write-down, call it 25, call it 30 cents in the euro, then you can have a situation where the EFSF steps in, replaces outstanding peripheral debt with effectively European bonds backed by the German government via the EFSF, and that will allow a degree of write-down to be taken, not as much as the market is currently predicting, but it would also provide a credible solution. I'm not saying that's what's going to happen,
but for that solution,
that's the only way
Simon,
these stress tests will be useful.
Yeah, and you need the backing of Germany, and it's not sure that actually the German government would be allowed to do that because their citizens would be up in arms.
Well, I'm not sure they're going to ask their citizens whether they're going to do this. This is about saving the euro. I'm not sure there's any requirement on German politicians to ask their citizens.
All right, I'm sure that will go down very well. Simon, in terms of what we're actually seeing for these stress tests, you're saying, of course, then they need teeth to try and, I guess, make do and mend if there are any broken banks. But the authorities don't have enough power to actually force them to do anything, or do they?
No, they don't. And we can see exactly what Elliot was talking about in Germany, where banks that are going to fail because they don't have enough equity are saying, well, actually, we do have equity. It's just not called equity. Let's be honest here. Equity is equity. Anything else is not. So, and we want a level playing field and we want a common test. If the Germans are opting out because they don't like the methodology, then that just undermines the whole process that we're doing here and shows there is an unwillingness in Germany to address reality. Their banks are massively exposed to peripheral debt and are going to take huge losses. Get on and recognise it.
Yeah, because we understand, for example, that Helaba is refusing to allow the EBA to actually publish the results, saying that it would be without legal grounds. Would you be worried? Are you going to be worried and looking at very closely these banks that are not publishing the results? Is it even worse not publishing them than publishing them and being a little bit weak? Absolutely.
That's the most stupid thing I've ever heard of, saying, oh, we've got European-wide tests, but we don't like them, so we won't participate and we'll hide behind the law to do that. If you've got any publicly traded securities out there, these should be sold off immediately if you refuse to publish your results.
Simon, 91 banks being stress tests, how many are going to fail?
Well, it seems that 10's the number that's been leaked there. Obviously, Moody's had suggested anything up to 26. I think basically equity markets would respond positively to a number around 20 and with a degree of scepticism to a number as low as 10. I'd go with the lower number, though.
Yeah. Simon, thank you so much. Simon Maughan then from MF Global.